In a video earlier this week, we predicted Matic to drop down to 92 cents, which is exactly what we got. But since bouncing off that 92-cent support, we have pumped almost 18%. At this point, we are seeing some really interesting signals to go along with this pump from our indicators. So let's dive into it. How's it going, everyone? My name is Jake with Trade Confident. Today, as I said, I'm going to be talking to you about Polygon. Now, we're on Polygon USD on the one-day time frame. Now, these three indicators, the TC top and bottom finder, price versus well money flow, and trend exhaustion indicators are what we're using to predict the market. And let me show you what they can actually do for you. The price versus well money flow is going to track overbought like here or oversold signals in the market for whale money. If you see it low on this chart, it means that whales have oversold and are likely to begin moving money into the market. As it rises back up, this shows oversold. The trend exhaustion will do the same, but actually tracks price structures. And what we saw back here was another oversold signal. The trend was oversold and likely due for a move up. So with that, you know which direction the trend is likely to go. And the last thing you need is timing. And that's where the TC top and bottom finder comes in. As soon as you get that buy signal, along with the price versus well money flow low and trend exhaustion low, that's when you are going to be seeing crazy moves in the market. Now, very interestingly here, the trend exhaustion is showing you oversold again, despite this massive pump. Now, to clarify, it did show oversold on this candle as we touched 93 cents here. I'm going to call that actually 93 instead of 92. It's like 92.97. So saying 93 cents here, that's when we were oversold and the price has pumped and the trend exhaustion is hesitating to track up. Price versus well money flow is still about 64. That's decently high, but at this point it has ticked back up. So there is potential at this point to move up. The most immediate structure resistance is about right here at $1.15. And if we break that structure resistance, we could actually move as high as $1.30. From the current price up to this $1.15 mark, it's actually a 7% move up. And if we move up to $1.30, that's nearly 20%. Now, this pump is not impossible for Matic, especially if whales keep dumping money into it as they have. However, there is divergence here. As the price has generally trended up, the price versus whale money flow has trended down, showing that there is whale money moving out of the market. When we see this type of divergence, it's actually called bearish divergence, and it usually results in moves back down in the market because no trend can be supported without the help of whale money, and whale money is trending down. So an upward trend in price is not likely to last. This is where things get interesting. Overall, what I think we could see at this point is the price versus well money flow. I think whales could push money into the market up to that $1.15 mark. At that point, we'll likely see the price versus well money flow had risen. Maybe, let's say around the 80 area. Trend exhaustion will have likely moved up to its innermost top red section. At that point, if we see a sell signal, that's almost a sure sign of a move back down in the market. Now, I'm going to show you a helpful way to actually track this. I want you guys to try setting up alerts with these indicators. What you're going to want to do is head to the alert tab, click create alert, set the trend exhaustion for watch for drop. Call this Matic overbought or whatever you'd like to name it. It's up to you. Create, and this alert will let you know as soon as the trend exhaustion comes into this top red section. If we see that and we see a buy signal, let me show you this too. Set the TC top and bottom finder here for a sell signal, Matic sell. This is where you're going to see likely up around here a sell signal and trend exhaustion on the overbought territory. That combined with price versus well money flow having moved up will likely result in that move down we are looking for. Again, these two alerts will let you know. You can be completely hands off on this. You don't have to track it. These two alerts will let you know when it's time for the price to drop. So again, to reiterate, move up to $1.15. Followed by a move back down to 93 cents is a very possible move. However, we have to be aware that whales are tending to pump the market like crazy. So it's very possible, and I want you guys to be watching out. It is very possible we could see moves up to this $1.30 range. And at that point, I can almost guarantee there will be overbought signals on all three of these indicators. With that, if you want to grab these indicators so you can stay on top of these signals, be sure to click the link in the description below. It'll bring you to the indicator page right here. And what you're going to want to do is scroll down to the Pro Trader Bundle. This is the best possible deal with 70% off of all Trade Confident indicators. In this pack, you'll get the TC top and bottom momentum finder, trend exhaustion, and price versus well money flow. These are the best indicators you'll see in this market, and it'll include 8 other indicators for your use too. Purchasing all of these individually would take over $2,000, so we wanted to give you this 70% off bundle pack. Snag it at this link right here. With that, thanks so much for watching. Trade safe, trade confident, and I'll see you in the next video.